In this training, we're going to be walking through SONAR's SCI Supply Chain Intelligence tool. This tool will turn shippers' freight data into strategic action and help optimize their freight procurement strategy by blending their rate with real-time market benchmarks. SCI brings together rate insights, market context, and lane-level guidance to help cut costs, reduce risk, and gain control of your network. When you first log in, you will see your My Files tab with all the previously uploaded files. You are able to run another analysis on any file by changing your dates and clicking Analyze, or you can also view prior analysis, share them, export or download the data, or delete. This page is also where you're able to download the template and upload a new file. In the very top right corner, you also have the ability to change your theme. So if you prefer a light white mode, you can adjust that here as well. Once you upload a new file, you will receive a green notification at the bottom letting you know that your upload was successful and how many lanes were added. You'll choose your date range and click Analyze. You'll then see a notification in the bottom right corner showing the analysis is currently in progress. SCI can handle files of up to 20,000 lanes. The larger the file, the longer process time. You can also leave this screen while it processes. Once the file has completed processing, that same notification will allow you to click View Summary to start running that analysis, or the very first row is going to be your most recent file. And then our current analysis here for the dates that we searched is now also showing complete. So you can click the view here, which will also take you to the summary page. The summary view page is best for identifying high impact cost issues so you can quickly see your biggest savings and risk. You can identify your total transportation spend, how that spend stacks up to the contract market, what lanes you are over market or those opportunities for cost savings, what lanes you're under market or potential compliance risk, and total volume. The opportunities section is where your rate is above the market by more than 10%, and these lanes have lane scores that are higher than 60, meaning they're easy to cover. The at-risk section is where your rate is below the market by more than 10%, and the lane score is below 25, meaning difficult to cover. These two cards help identify the lowest hanging fruit, or the lanes that need the most attention. Then the pricing alignment and cost insights map at the bottom helps highlight markets or areas of your network that need the most attention. Green is considered under market and red is over market. You can organize this based off origin or destination. And clicking on any market will immediately take you into the network view. Upon first load, depending on how many lanes you've analyzed, the network view can take a bit to load as it's aggregating all of the lanes that you've uploaded based off of that main origin or destination market that they are coming from or going to. The network view is best for evaluating risk by region or facility, whether you have all lanes coming into an area or all lanes coming out of an area. You can choose your outbound and inbound at the top here. Each of the cards are going to be groupings of lanes. So for this first one, we have El Paso, Texas to all markets. This is including 3,232 lanes. It will show your average rate as well as the average spot and average contract rate for all of those lanes. and then your delta to contract. So the average my rate minus the average contract. Are you over or under for this facility, DC warehouse? You'll also see average fuel surcharges. So spot always has fuel included automatically, but you'll see there was 37 cents fuel included in contract as well as the my rate. So you have an apples to apples comparison across all three rates displayed here. You'll see total miles, my spend, total volume, and the total carbon that is used for these lanes recorded in metric tons. The pricing alignment at the bottom has to do with the opportunity and at risk. So those lanes that you are over market and under market and how much transportation spend you have in each of those areas. You'll also notice that you have these under market flags. This is if your network's average pricing is under market by more than 10% to the average contract market rate. It will flag under, at, or over market are the options here. Over on the right side, you have that market context. So we have our outbound tender rejection index highlighting where capacity stands currently. Is it loose, neutral, or balanced, or tight compared to the US national level? It also gives you a 90-day percent change as well as a year-over-year change for that origin market. The key market trend also gives you some insight into the week-over-week change in the capacity that we're seeing. So this scale is on a -5 to +5. Closer you are to positive, the tighter that market is, or the tighter conditions we've seen week over week. Closer you are to that -5, looser conditions. In this case, we've seen some loosening for the El Paso market. We also provide some intermodal volume. So this is just looking at overall volume coming out of that market with a month over month and a year over year change, as well as if that market is considered low, neutral, or high. And then finally, we've got our head haul index. This section here is just going to give you some insight into the overall demand coming out of that market. Are we looking at an outbound heavy or an inbound heavy? And this also gives you an idea of capacity that's going to be coming into the market. If it's an outbound heavy market, then you know there's going to be a lot more demand for the capacity coming in. Versus an inbound heavy market is going to be the opposite. There's going to be a lot more trucks coming in and a lot less demand for the capacity there. We also show the outbound market share. So ranking this market from 1 to 135 markets, closer you are to 1, the larger that market is. Closer to 135, the smaller. Then we have the map down at the bottom here, and this is the network cost opportunities. So you'll see we're still selected on this grouping of lanes here. So it's going to show the El Paso market, and then it will show all of the lanes going out. Where are all of these lanes going to? The map is also color coded. So if you are under market, that lane will show green. If you're over market, it will start to show red. So you can quickly see that dispersion of your over under if you have a mix of that. And then the width of each of those lanes, or the boldness of those lines, is based off the volume. So if you have one lane in particular that has majority of the volume coming out of this area, you'll see a real thick line like we see on here. Lower volume lanes are going to be much more narrow. Now, drilling into our lane view page here, this is best for tactical lane by lane analysis and is the most granular view of all of the lanes uploaded. It allows you to compare your rate versus spot and contract market rates, show how difficult the lane is to cover with that lane score. Again, this is a 1 to 100 scale. Closer you are to 100, easier the lane is to cover. Closer you are to 1, the more difficult. And then if we show details on this particular lane, it is also going to show you your total miles, the total spend for that lane, how much volume you're running on it, and then the carbon impact, again, recorded in that total metric tons. We also show the my rate or benchmark rate that was listed on the template, what that delta to market is for this lane specifically, and then the equipment type. The lane ID and length of haul listed here are also pulled from the template. The length of haul is one of the only things on the template that is optional to fill in. If you do not put a length of haul, we will calculate it for you based off of our calculations, but it is highly recommended that you put in the length of haul here. You also have market rates, spot and contract. Then the fuel surcharge is broken out just like on the network view, but instead of all of these rates being averages, it is actually, the rate for that specific lane. And then the guidance at the bottom, we will circle back to that. You're also able to filter this list. So if you have US and Canada lanes, you can filter that down. You can also filter by the equipment type, so van, reefer, flatbed, or adjust your sort. So if you wanted to sort by your lowest volume to highest volume or highest volume to lowest volume, you can do that as well. Moving on to the right side here. So we're going to give you some information around the contract and spot pricing. We provide the scales, so low, average, and high, and then wherever the dot is on that scale is where your rate falls compared to the market contract, and then where your rate is sitting compared to the track spot market rate. And then the delta to those rates is listed as well, along with confidence scores in the middle. So you know, out of that 1 to 5 scale, how confident or how far we had to expand from this lane for the rates that we're providing here. Moving on to the risk and efficiency quadrant. So this is probably one of the most important things on this page. This will classify the lanes into 4 different quadrants. You have the high risk zone, which are lanes that are difficult to cover where you're over market. You have the savings opportunity quadrant, which is easy to cover and over market in your pricing. The efficiency zone is easy to cover and under market. And then the carrier dependent zone are those difficult to cover and under market. If your lane falls in any of these quadrants, like this San Diego lane here, that is what then fuels the guidance within those lane cards. So in the carrier dependent zone, you really want to make sure that you strengthen those key carrier partnerships to maintain competitive pricing and reliable service. This is something because the lane is difficult to cover and you're under market. The carrier that you're running with this is crucial to continue those savings, because typically being a difficult cover lane, should you lose that carrier or partner here, you could very well end up in the high risk zone on this. Then moving into the efficiency zone, this is going to be, where you'll really want to shift more volumes, maximize the cost savings here. These lanes are easy to cover and provide operational efficiency. You can also drill into your opportunities and at-risk lanes as well. Clicking on those opportunity and at-risk cards from the summary view will take you here as well, where you can really dive into those, low-hanging fruit lanes where you really need to dig in and see where can we have some additional cost savings, where are we most at risk for service failures, and break all of that down. Now, managing this in UI is great with all of the visuals and being able to see where most of your lanes stack in the quadrants, but you are also able to export lanes, whether you want it on that network view or the lane view. The network will automatically download 2 files, one for inbound and one for outbound, and then the lane export will download all of the lanes that you upload. If downloading both options, so therefore 3 files, It will provide a zip file for you to see all of those. So you've got your outbound network, your inbound network, and then that lane view file. For this, we'll go ahead and go into lane view. And you notice it will download all of the information, the lane ID that was initially put on the template, the lane score, the volume that was inputted, contract low, high, and average, spot rate low, high, and average, what the fuel cost was, and everything else in here. Length of haul, origin, destination, what your rate initially was, and then all of the totals for each of those lanes along with that pricing alignment. So if you wanted to filter just to those lanes where you are over or under market, you can easily filter this section and start to work on those first. I hope you enjoyed this tutorial video. If you have any further questions or would like a deeper dive for your specific network, please reach out to cs@gosonar.com or your customer success manager directly, and we'll be happy to assist.